Motilal says it's one of their top picks for 2024. Jefferies too has a positive outlook on the space. Nigel joins in with the details. Nigel.
Well, let's run you through the Motilal note first on, Dalmia Bharat. They believe that the stock is set to perform. Remember, if you pull up the last 6-month chart of the stock, it's up only around 2 to 3%. Well, the Nifty is much higher, and cement peers as well have outperformed. But they believe now it's time for it to perform, and that's why 2024, they believe that Dalmia Bharat could be well placed. They have a buy rating, target price of 2,800 rupees. They say that valuations are at around sub 10 times EV per EBITDA, and also on an EV per ton basis at around $102 per ton. This is on FY26 numbers. They say that there's a strong case where the multiple could be higher that's assigned to Dalmia Bharat because earnings will improve, and they're also focusing on capacity addition. The few points that they've highlighted out here is, first, they like the way that they're scaling up their operations, and capacity is likely to head to around 110 million tons in the coming years. This will be via both organic as well as inorganic growth. They also go on to state that they're undertaking various initiatives like higher blended cement, green energy mix as well. And the final factor they say is, yes, capacity addition is coming on stream, but the balance sheet is in a good space. And they expect the net debt to EBITDA ratio to continue to be less than 2 times. On an EBITDA per ton basis, they say that the last year it was around 900 rupees per ton. But they're expecting that EBITDA per ton to gradually move up for Dalmia Bharat, and we should get those numbers up for you on the screen. So in the coming years, they expect it to move up to around 1,150, and from there to move up to around 1,250 because operating leverage will play out, and also they're taking various initiatives on ground. What does Jefferies have to say? Well, they have written a note, and they have had interactions with various dealers. So a few takeaways that they put out there. The price decline in all regions was in the vicinity of around 1 to around 2% in the month of December. They say that for Q3, they are pegging the growth at around 3% on a quarter-to-quarter basis. They're also saying for Q3, the highest growth came in South India, while other regions were more or less flattish to around 3% odd. And the demand trend actually in December is actually mixed because we're looking at October and November data together. And in both those 2 months together, they're saying that the growth was sub 10%. But on the whole, they're expecting double-digit growth for FY24, given the strong showing that we already have in the first half of the year. And they're saying that once activity resumes, from the 3rd week of January, they're expecting some price increases as well to come about once construction and demand is back to optimal levels. So let's see how that goes. But Dalmia Bharat is a start today because of Motilal Oswal note.
Okay, all right. Thanks for pointing that out, Nigel. So cement in focus, particularly Dalmia Bharat reacting quite well to some of that brokerage commentary. We'll